Hey guys, and welcome back to another video. In today's video, we're going to be explaining a little bit about one of the hottest topics in the investing and finance market in that world, and that is going to be inflation. We're going to talk a little bit about what it is, a little bit about some of the trends that we've seen, and we're going to talk about whether or not inflation is really as serious as a lot of people are making it out to be. You can see with headlines like this one on your screen right now that a lot of people make it sound like inflation is this thing that is going to completely destroy the United States. Obviously, if it gets out of control, that's possible, but I'm going to show you some graphs and some data today that might help you to feel a little bit better and like we're in a good spot. Now, the main way that inflation is measured here in the United States is with the CPI, or the Consumer Price Index. Now, a lot of our recent videos regarding Treasury bills and the state of them have talked about the CPI, but as a quick refresher, this is something that monitors the average change in a whole bunch of different things: food, housing, recreation. Basically, it tries to get an umbrella of the entire US economy and how much things cost compared to how much they cost in the past. Now, obviously, over the past couple years, inflation did get up to pretty extreme levels, but at the time of recording this video, it sits at just 3.1%. And so when you look at the average inflation over the past 30 years, going up to 2019, the average inflation was 2.5%, making this 3.1% not look quite as bad. You can also see, however, that the Fed has a target inflation rate of just 2%. So the question then becomes, how exactly are they supposed to get this inflation closer down to their target rate? And we'll talk about that next. Now, realistically, they can control inflation through a variety of factors and a variety of policies, but the main way that you're going to see them do it is through changing the interest rates. When the inflation's higher than they would like it to be, they're going to go ahead and raise the interest rates to slow down the economy and help bring down prices to alleviate some of the pain that consumers start to feel when inflation goes crazy. We can also see this the other way around when inflation gets down to levels that they want it at. For example, if they ever got it down to that 2% target of theirs, they would likely lower the interest rates to sort of let the economy flourish if they're not super worried about inflation rates at that time. Another thing that is often associated with inflation is bond prices. Usually when we see inflation go up, bond prices are also going to follow, and this is a way that a lot of investors try to beat out inflation. But the thing is, a lot of times inflation actually beats out bond prices, and although we're keeping up a little bit and holding on to a little bit of that value of our cash, we're still falling behind with our investments. They give a little bit of an example here in this box. You can see, for example, if inflation is up to 5% and you're a bond investor getting an average rate of 4%, this means that every year you're using around 1% of your purchasing power and losing it. On your screen right now is a chart that will show us the trends for that relationship that I just described. So with our black line, we have the actual interest rate of the bond that you are buying. This is the average for a 1-year Treasury bond at any certain point in time. Then with our red line, we have inflation for that time. You can see that the majority of the time, the red line is going to be above the black line, meaning that we can't quite keep up with inflation. And the blue line at the bottom is the red line, so the current inflation, subtracted with the black line, which is the average bond price. You can see, once again, the majority of the time, this is going to be in the negatives, meaning that if you are only investing in bonds, you're actually going to be losing purchasing power. It's better than nothing. Obviously, if you're just keeping cash, you're simply losing out to inflation, but a lot of times bonds also can't get the job done. One of the reasons that we focus so much on Treasury bonds, bills, and notes on our channel recently, however, is the fact of what we see at the very right of our screen. Recently, you can see that 1-year bond prices have actually overtaken the inflation rate, meaning that we can gain purchasing power by investing in bonds, which is not, once again, a very common thing to happen. The reason that this is so special is the fact that bonds are a nearly guaranteed investment compared to the stock market where things are super risky. If we can be beating out inflation with a virtually guaranteed investment like a Treasury bond or bill, that is certainly something to look into, especially for an older investor that is looking to be a little bit more conservative. Another important thing that we can see with this chart right here, if we go ahead and zoom it out, is that the inflation rate really isn't that crazy. If we go ahead and have a look in 2022, obviously it was getting up there, approaching 10%. That is super high, but looking at where we are right now in the 3% range, that is not super abnormal. And even going back to the 1980s, we had inflation rates approaching 15%. So it's really not as bad as it could be. In terms of the Fed's current plan with inflation and interest rates, this is what Jerome Powell had to say. He said that there could be an interest rate cut coming soon and that they are not going to wait all the way until it gets down to that 2% goal to make the cut. This is good news for investors in general, particularly with the stock market. We usually see gains when interest rates start to go down, as long as the inflation is not a super big concern, because that could be incredibly damaging to the economy, obviously. We've also been receiving this question a lot on our videos recently about why the US can't just print more money to dig us out of debt and help the economy. Well, the answer is inflation, but in terms of the amount of money that the US is printing right now, here is your answer. For 2023, this is the amount that they printed of each type of bill, as well as the total dollar value that it totaled up to, and that came out to between 166 and 190 billion dollars printed in just 1 year. Now that might scare you hearing that big of a number, but this really isn't super out of the ordinary. Here is the amount of money that they've printed in each of the past 10 or so years. And the reason that they print this much money is simply because they are also pulling a lot of money out of the cash supply due to damage or other such things. Whenever they deem a bill or a coin to be unusable, they pull it out, and so they're constantly having to print more. Obviously, however, the total value of currency that's being circulated is still continuing to go up in the United States. You can see as of 2022, it sat at around $2.26 trillion. That is a lot of money when you compare it to something like 2000, when we sat at just $500 billion. Once again, though, if you're worried about the United States and their current inflation issues, let's go ahead and look at a country that truly has inflation issues, like Venezuela. Looking at this chart right here, comparing Venezuelan inflation to inflation here in the United States, you can see that the United States appears to stay almost at zero, and that's simply because the Venezuelan inflation is so high. If we go ahead and read at the top of our screen, we can see that Venezuela averaged a 9,000% price inflation in 10 years. If you're wondering what that does to the value of the dollar, the actual purchasing power of the money that you own, $1 US currently is the equivalent of 36 Venezuelan dollars. But one thing you might not realize is the fact that they actually had to change their money, because it used to be the equivalent of 3.6 million Venezuelan dollars. $1 bill was the equivalent of 3.6 million Venezuelan dollars. That is what real bad inflation looks like. I hope you did go on to enjoy today's video, and I hope you learned something new. Go ahead and put any of your opinions or questions regarding inflation or the current economy in the comment section down below. While you're down there, go ahead and subscribe so you don't miss any more videos, and leave a like to show us your appreciation. But other than that, we'll see you in the next one.